Welcome to the Telltales podcast, where we discuss cash flow and its pivotal role in investing. I'm Mike Nicoletti.
And I'm Jason Wallace. Along with our co-host Hunt Lawrence, aka Mr. Cashflow, we're here to explore how cash flow drives the economy and investment performance.
And don't forget to join our email list at telltales.us to get the cash flow memo. It's about 20 pages covering 80 companies, U.S. government's finances, and the energy sector.
It's like having a masterclass on investing in your inbox every week.
The following conversation is intended for informational purposes only. You should always do your own work to determine if an investment is suitable for you.
First is Exhibit C. I now have copies of the OPEC report and the IEA report, the organization based in Paris, where the IEA has production demand growth of, like 700,000 or 800,000 barrels, and OPEC is saying 2.5. If you look at Exhibit C, 24 versus 23, we're right down the middle. And I'm going to do my best over the long weekend to try to see where the differences are. Obviously, OPEC would like to see more demand growth, and IEA, which was set up as an offset to OPEC by the consuming countries, would like to see less demand growth, but I'll try to straighten it out by reading both reports over this weekend and trying to reconcile. I do think that forecast we have on Exhibit C is pretty good, but maybe some changes by next Wednesday. On Exhibit B, the near-term gas price of $2.77 this morning was like $2.40 something. What has happened is the heat that came across the middle of the country and into the Northeast didn't really increase power prices or gas prices very much. And so the near-term gas price is pretty weak. Also, the reason for production being off and averaging like 100 through May and June was two of the Marcellus producers, EQT and Chesapeake, had each curtailed about 2 billion a day of gas each. That gas is now back. These statistics are now running high enough, so year to date's like 101.8 or something. So that forecast of 103 I mentioned in prior Wednesdays was looking a little high. Since we're only in July, I'm going to think that the 103 forecast may turn out to be pretty accurate if gas prices stay high enough for EQT and Chesapeake to keep that production on. The Marcellus is great. In many basins, you can't curtail production without hurting your future production or your reserves. The best parts of the Marcellus you can, and the two largest producers, EQT and Chesapeake, have taken advantage of that. Exhibit A, we have had, since we were together last Wednesday, a very poor performance by Joe Biden in the debate last Thursday. Lots of speculation that he shouldn't run, that he should be replaced by Kamala for the remaining 200 days of his term. Who knows what's going to happen? However, the issue of overspending remains with us. The statistics of $1.6 trillion of overspending for 2024, I think is pretty good. You'll see higher numbers referred to in the debates back and forth between the parties. But I don't think, as I said last Wednesday, I don't think canceling student debt belongs in this table. This table is a cash flow statement for the government. The revenues coming in at just under $5 trillion and the money going out at just under $6.5 trillion. Closing that gap is going to be up to the next president. There's more and more publicity by economists as well as political people running for office about the loss of position for the US dollar as our reserve currency. And that is a risk because we're able to run these deficits and have a strong currency relative to the euro, relative to the yen or relative to the yuan, the Chinese currency, because we are the reserve currency. But it's possible that foreign central banks, sovereign wealth funds, corporations, wealthy families will start keeping their cash reserves in other currencies. So US dollar position as the world's reserve currency is not going to be helped by continuing to run these deficits. Curtailing these deficits is going to be extremely difficult. There's another podcast that Mike and Jason listen to called All In. There's 4 people out of the venture industry. They go on for an hour and a half. Like Jason and I think 30 minutes is plenty long, but they go on for an hour and a half. And 2 weeks ago, they had Trump on. Strongly recommend getting that podcast. I think anyone who listens to it is going to be more comfortable with the idea of having 4 more years of Trump. He really did a superb job. These 4 venture capital people or tech people, 2 are pretty left of the political spectrum and 2 are kind of middle to right of the political spectrum. But Trump handled everything. They normally, I think, come out on Thursdays, but last week they waited until Friday so they could comment on Biden's performance. And that also is a podcast I'd recommend. A couple of them are really focused on this reserve currency and how do you finance the deficit? Will 10-year bonds stay higher even if the funds rate is reduced? Those are worthwhile things to listen to. I'm not sure, having listened to 2-hour-and-a-half podcasts, I'm not sure if I'd budget the time to listen to them every week. But those 2 ones where Trump is interviewed and the one right after the debate are definitely worth, as an investor, worth listening to. Mike and Jason, anything else on the exhibits?
The only thing I'd add is, well, one, I'll make sure I put the links to those podcasts in the show notes and so in the email that goes around this afternoon or tomorrow morning. And the second thing is, I think that implication of maybe the dollar it's just not going to be the default reserve, which also just reduces demand for our long-term bonds, which probably means more likely than not, there's going to be a real spread, a few points over inflation. So even if we get inflation down to 2 to 3%, it's realistic to have a 10-year bond at, call it 3 to 4%, maybe a little.
Yeah, I would say, I think Jason will agree with me. In a 2%, 2.5% inflation, I would think real interest rates of 2% are what we should anticipate as investors. Jason, over to you on that point.
Yeah, I completely agree.
And 2% real rate compares with a real rate of about 0 after the 08-09 Great Recession. What happened was quantitative easing. And basically, that's the Federal Reserve buying federal bonds. Now, we've said this before, but it is kind of sobering. Don't run out of your equity positions. I mean, equity positions are a way to cope with this. But the deficit over COVID, if we go back to Exhibit A, was around $7 trillion. And the beginning of that was Trump. And Trump says that was warranted, but the Biden administration kept doing it. You can see the deficit in fiscal 20, which is ending September 20, was 3.1 trillion, up from like $1 trillion in the preceding fiscal year. And then in fiscal 21, which is for Biden's first year, it's 2.8 trillion. So if you say extra spending, and you include some extra spending in 22, so let's say to combat COVID or the Biden administration spending a lot of money because they won the 2020 election and they had an agenda, the CHIPS Act, infrastructure bill, et cetera, et cetera. Let's say there was 7 trillion of overspending during that period. During that period of 7 trillion, the Federal Reserve acquired $5 trillion of U.S. government securities and some mortgage bonds. So 5 out of 7 was monetized. That's irresponsible. That got the Fed balance sheet up to levels that were way above where it needed to be, approaching 9 trillion. Now, we've been going through quantitative tightening, and it's come down by a couple of trillion. But the Federal Reserve now has decided to slow that up. It was coming down at the rate of around 100 billion a month. And they've decided to slow that up. I think the pace that they're on now is about half of that. I think that's a little irresponsible. That's dry powder for the next time we need the Federal Reserve to step in. So they're not entirely blameless. I mean, the politicians clearly are running big deficits, and those are irresponsible. But the Federal Reserve isn't entirely blameless here. Now, against that, they're likely to hold the Fed funds rate for most of the year. I mean, maybe they go down a quarter point or something in September. So they've kind of learned their lesson. But I think I'd be much more comfortable if they kept that Fed balance sheet coming down at the rate of 100 billion a month rather than 50 billion. But why don't we do Jason first? I think Jason is more aligned with me on this. So Jason, why don't you go first?
Yeah, Jerome Powell actually gave an interview, I think 2 days ago at an ECB forum, and was highlighting a lot of the irresponsible spending we've been doing, and with against the background of a really strong economy and low unemployment, basically calling it reckless that we were running the deficits that we were. And he said he stressed that it's concerning. It's not a critical problem to solve today, but long term we're going to have to do something about it. So at least Jerome Powell is comfortable enough now vocalizing that. He's trying to put the tightening on when Congress is doing the opposite and authorizing a lot of spending. So they're really counteracting each other.
Mike, you get the last word on this.
I think if you think it's a priority for the U.S. dollar to be a world reserve currency, then we ought to have our financial house in order. One step towards that would be not to have the Federal Reserve balance be so high.
Right. Now we have to rush. We've blown 15 minutes doing macro stuff. So let's do healthcare first. That seems like we were giving healthcare short strip in earlier Wednesdays. We did healthcare first last week. Let's do that now, but save at least half the 15 minutes to cover news on chips and software and autos. I guess the question I'd have is not necessarily on page 15, and I'll update this page this weekend, but the page with Lily. Mike and I were talking this morning on these weight loss medicines. There really isn't that much of a moat, to use Warren Buffett's term, around that business. You referred to it last week with his and hers, and because it's in short supply, being able to compound these chemicals. But how does that look to you over the next 12, 18, 24?
Yeah, I think, the next 12 months, they're pretty safe, but going out a few years, there's really a risk. There's not just from compounding pharmacies, but there's a lot of compounds in development right now that are, the next generation of these GLP-1 drugs. So whether they're more effective, safer, different mode of action, there's going to be new versions that are just as effective, maybe more effective, and it's going to drive a lot of competition in this space. These drugs, I think you alluded to it with the moat, that I don't know the exact dates their patents expire, but they're shorter than you would expect due to they've been in the market for quite a number of years already, just treating diabetics.
Right.
So,
like semaglutide, for example, the first patent, or the main patent for that one, expires in March of 2026.
Right.
I mean, it's right around the
Not
corner.
far.
So you take that, combine it with all the other competitive products that are going to hit the market, and I don't know.
I mean, the very first one of these, it was tough to administer, but the patent on that one's already expired.
Started out, Jason, as injections rather than pills.
Yeah, and the ones they're supplying right now are still injections, and they use an auto injector, so it's like a pen-like device that you hit a button on the top of, kind of like a ballpoint pen to shoot an injection in, and the dose is pre-selected. They just approved a couple versions of this in pill form. It's harder to get enough of the active drug absorbed in the bloodstream through pill form, but they're able to do it, and that's a daily pill instead of a weekly injection. There's also political pressure on these, so that Bernie Sanders has been beating the drum on the price of these GLP-1 drugs. The White House has weighed in on it just recently. They published an op-ed in, I believe, USA Today, kind of backing up Bernie Sanders' stance on it, that we need to be able to negotiate the prices of these drugs and really drive them down, because we're paying multiples more than European nations are for this drug here in the U.S. But I think competition is going to drive the price down maybe before government action does.
Right. Jason, I'm going to update this page, but we can't leave this page without hearing your take on PBMs, pharmacy benefit managers, which is important to United Health. It's important to CVS. CVS, the drugstores seem to be doing exceptionally poorly. I don't know whether it's more mail order or telehealth or what's going on with drugstores, but so CVS, the way I look at it, CVS wants in the worst way to be United Health, but United Health is starting to run into some significant headwinds, and I know that's a subject you're pretty well informed and have strong views on.
Yeah, I think they started, pharmacy benefit managers started out with good intentions to be able to negotiate bulk purchases of drugs from the manufacturer. Where they started making money in it and push the limits too far, I think, where we're at right now. So, they dictate which pharmacies have the drugs at which cost, and it's been a while since I've looked at it. I don't remember what percentage of the revenue they take out of that as being the middleman, but it's a pretty significant portion of the profits. So, as you alluded to with CVS, their pharmacy benefit management division is bigger than all of their retail chains, and they dictate what drug costs what amount at all of the CVS pharmacies. So I kind of feel like right now they're just acting as a middleman, controlling the market and dictating a markup at this point, where maybe they had good intentions in the past, but today they're adding costs to the system, and they're driving out privately owned more mom and pop pharmacies out of the market. They just don't have access to the drugs, or the drugs cost their customers much more than it would if you went into a CVS to fill that prescription.
Yeah, I think that's the biggest point. And it's a shame to not see like the FTC focused on this, or they're worried about Hermes handbags and stuff that just doesn't make any sense. Meanwhile, this has been an ongoing issue for a long time, and in our neighborhood, we've lost almost all of our small drugstores down to the big three.
All right. Any news if we turn to page 15, where we have Pfizer, Moderna, Lantheus, BioNTech, and Vertex? Any news on any of these companies on page 15, Jason, that's worth mentioning?
In Moderna's case, they got a federal grant I believe 170 million to the continued development on bird flu vaccine. So not a huge amount. In Lantheus's case, big in the news was the approval of Eli Lilly's Alzheimer's treatment to clear amyloid plaque from the brain. How it applies to Lantheus, kind of tangentially, is they have a product to use PET imaging on tau protein tangles. So as research into Alzheimer's progresses and maybe the drugs to clear tau protein tangles in addition to amyloid plaque, Lantheus will have one of the diagnostics that can image those tangles in the brain. So something to look forward to in the future.
Yeah. Anything there, Mike?
To add, other than just running through the numbers, you think of the risk reward and who's really driving cash flow growth. We talked about it last week, is that Vertex and the upside there is really interesting. And then tangentially related to Vertex is the Supreme Court ruling, I believe, that blocks the Purdue Pharma settlement. So this ties back to the need for a non-opioid painkiller. So we continue to wait for more on Vertex there, but that's in addition to the type 1 diabetes opportunity.
Right. We're down to 5 minutes. Page 1, Apple news. Do you think Apple having a board seat on OpenAI is fair to Microsoft?
I mean, it's interesting.
It doesn't seem fair to me. I mean, Microsoft committed first, and it's built OpenAI into a lot of their products. I mean, I hope they have some provision where the Apple guy has to leave the room or leave the Zoom call when when they get into OpenAI being used in the suite of Microsoft products. It doesn't seem fair to have an Apple person to hear all that discussion.
Yeah, and vice versa too. And also remember, Microsoft put up $15 billion and Apple is merely acting as a gatekeeper. Now, the upside for OpenAI, I think probably at Apple is larger, potentially larger, at least equal sized as it is for Microsoft. So it's really interesting. Their structure makes everything more complicated, and time will only tell to figure out how this sorts out.
Yeah.
If I was to guess, they did it as a carrot, because the way that Apple's structuring this whole thing is that OpenAI is going to be one of many models competing for the default status opportunity in the same way that Google has been the default search engine. And whoever wins that battle, I think they're all looking at it through the lens of search. And if the result is similar to that of search, then that winner will do quite well. So they may have offered it to Apple in a way to make sure that they have the best chance they can possibly have to capture that opportunity.
That was kind of my view as well, in light of hearing that Apple may be negotiating with Meta to use some of their language models on the iPhone. Taking into account that Meta maybe has the best small language models that are small enough to run locally on the device. And it appears the direction that Apple wants to push the iPhone and these AI models.
Right. Now, when we talk, Jason, when we go through that would be running the models in the cloud, right? Not necessarily on the chipset in your iPhone 16.
Well, it's a combination. I think you would try to do as much as the computation on the phone, so that you and I pay for the electricity by charging our phones rather than Apple in their data center.
Right.
And that is what Apple has said. They said that Apple AI will actually run predominantly on the phone. And in the case of OpenAI, it will hit an outside server.
Mm-hmm.
I think a little more news on Apple and iPhone is it came out that the real Apple Intelligence, the bulk of their announcement and the products there won't be released until after the new year. So in 2025. And that, I think, begs the question of, will they have a huge holiday upgrade cycle that I think, it sounds like some people are counting on, and that might not materialize if the AI tools aren't there to take advantage of. Will you drive to upgrade this fall, or maybe, as a Christmas gift if the software features aren't there?
Right. The power requirements for these centers are remarkable. That Google has someone who's in charge of keeping track of how much CO2 they emit. And I think in the last several years, they're up like 37% or something. And they relate it all back to their centers. And, and that probably is going to accelerate. Google, Amazon, Microsoft, everyone. No one is taking the position that they can run these centers with the large language models with less power. Seems like they're all predicting quite a lot more power. And that's where the CO2 emissions come from. I mean, they're careful. I can tell you from the energy business, they're careful, enter into contracts to acquire solar power, wind power. Solar power and the wind power may be in Kansas. Their data centers in the Midwest someplace. You can't get the electrons from Kansas to the Midwest. So they wind up using, power made by coal or natural gas or what have you. I have to say that Alphabet, being honest about it, probably setting the mark for the other tech companies to be forthright about this idea that they're going to get to net zero by some close-in date. Just seems unrealistic.
Right. And that's on the, that's why you see Amazon trying to do the deal for the nuclear capacity. You will see at some point some portion of, citizen revolt against this, because in general, people's electricity prices are only going to be able to go up unless our power generation can keep pace with the demand. And so far, it's been hard to add capacity, certainly baseload capacity.
Right.
Okay, let's take a quick break for a message from Oakcliff Sailing.
Hi, it's Jenny Duclay from Oakcliff. I'm about to head down to the docks to welcome Far 40 Gray and Far 40 Blue back from their voyage. It took about 6 days to get back from Bermuda, and I can't wait to go talk to them, so let's go see how they're doing.
I'm Erin. I'm boat captain of Far 40 Blue. We just got back from our delivery from Bermuda. It ended up taking us 6 days. The first 2 days we really had no wind, so we just motored the whole time and also tried to preserve the fuel that we had. The next 24 hours we were in a storm with like 30 to 40 gusts, torrential rain for hours. It took us 24 hours to get through, and then after that we had calm sailing to the finish. We ended up having to tow Gray back, pick them up in the middle of East River. They were having engine problems.
What are you most excited for being back?
To take a shower.
I'm Sarah.
Hi, I'm Kate.
And we were just on the delivery back from Bermuda on Far 40 Blue after doing the Bermuda race.
We had some nice weather at the start and the end, and in the middle it was a little bit rough.
A little rough. We were in a storm for 24 hours, but we've made it back to the dock, so I'm pretty happy about that.
Excited to be back at shore.
Most excited to sleep in a bed and eat food that's not freeze-dried.
I'm excited to take a hot shower and
be dry
and warm. Not be up at 4 a.m. steering the boat in 15-foot waves.
You guys do this again?
I think I would.
Yes, for sure.
Yeah.
And now back to the show.
All right. I don't want to chase anyone, including Mike and Jason, now their Nvidia positions. You have to get approval from the ISO, the independent system operator. And the ISO is charged with 2 tasks, kind of like the Federal Reserve. One is to have no blackouts, and the other have low cost to the residential consumer. And it's conceivable that some of these data centers will be deferred because just the point Mike made, if you siphon off the power that would otherwise be available to residential users and the replacement power costs more money, that's something that the ISOs, which ultimately report to our FERC, our Federal Energy Regulatory Commission, it's something that they are supposed to be careful about. I don't think that slows down demand for the Nvidia chips, but it definitely is going to be a factor as time goes on, I think. Any comment on Nvidia before we break off?
I don't have any new information. Except that GPU availability. This is sort of an interesting analysis of the availability of A100s and H100s. So that's call it the current generation. There's a new one that is currently being sold. That's the H100 would have been released a year ago, and the A100 2 years before that. So 3 years ago. So availability of those in various data centers shows you can kind of see when the new availability of H100s come up because availability goes up and it comes back down. And even in as recent as June, H100 and A100 availability was still fairly tight. So, our understanding is the payback period on an investment in a GPU is about a year, and provides a pretty healthy return over the course of 5 years. So as long as that's healthy, data centers will continue to make these investments. When we see that breakdown, that will be a signal that may not be demand there. But as of now, there's certainly a lot of demand.
Yeah, that not to say on the one hand one thing or the other hand the other, but just to close, this period of heat that we had in the Midwest, well, it's in the Southwest and the Southeast, they have lots of heat, but this period of heat we had in the Midwest and moving into the Northeast, without any move in the price of natural gas, without power prices going up very much, indicates that there's more supply there than people were worried about in terms of coping with high demand periods with the heat. And so I'm sure that whatever ISO we're dealing with is going to be a little more flexible on approving data centers or new users of electricity hookup. And it's not just data centers. As we onshore and bring more manufacturing back to the U.S., think of a Tesla factory. We have to take a minute or two and talk about developments at Tesla, but think about a Tesla factory. Everything uses power. So as you build more factories or build more things in the U.S., there's going to be more power demand. Just quickly, because we're over, Mike or Jason, Tesla news.
Well, the big news was they released their vehicle production numbers for the quarter, which were down year over year versus the quarter of the prior year, but higher than analysts expected. And I think the one that really was unexpected was the Chinese production and deliveries. So Tesla's got a competitive product. It is a more competitive market than it was a year ago or 2 years ago, for that matter. But Tesla seems to still be executing. Question is what is the growth rate of EVs going to be this year? How do EVs perform in general compared to ICE vehicles? So there are some theories out there that there's we're sort of reaching a local maximum, and maybe some of that is due to charging infrastructure and whatnot. Tesla's unique in that they don't have the charging infrastructure problems that others do. So maybe they're getting around some of those pushbacks.
Go figure. I mean, in talking with Mike in the mornings, I saw those production delivery numbers where the second quarter was lower than the second quarter of 23. And I thought, oh my goodness, the stock will come down 9 or 10% or something. Instead, it goes up. So it's definitely a volatile equity. All kinds of focus on your particular interest in Tesla, which is autonomous driving and robotaxis and whatnot, where in early August, there's going to be a laying out of their plans there. And that will be something to look forward to, I think.
Right. And a lot of focus on Elon's comp package, and if it didn't get approved, would he stay? So I think the stock sold off a lot on that.
Right. Good. Well, thanks for everyone taking the day before the 4th of July to listen in, and we'll be on again next Wednesday. And we will, after we do the oil, gas, and macro stuff, we will do healthcare first. I think for the next bit of time, that's a good pattern for us. Everyone have a good 4th of July. Be well and stay healthy. Take care.
The views expressed on this podcast are the hosts alone and do not constitute an offer to sell or a recommendation to purchase or a solicitation of an offer to buy any security nor a recommendation for any investment product or service. While certain information contained herein has been obtained from sources believed to be reliable, neither the hosts nor any of their employers or their affiliates have independently verified this information, and its accuracy and completeness cannot be guaranteed. Accordingly, no representation or warranty, expressed or implied, is made as to, and no reliance should be placed on, the fairness, accuracy, timeliness, or completeness of this information. The hosts and all employers and their affiliated persons assume no liability for this information and no obligation to update the information or analysis contained herein in the future, and may or may not hold positions in the securities mentioned.